Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. 16 weeks ago, whilst looking at the longer term charts here, I noted the September 2022 to date action as a double bottom, Adam and Eve type. This gave topside potentials for a primary target in the 235 area and a secondary harder to reach target up in the 251.60 area. Prices reached a primary target in the 235 area in mid-April and the secondary harder reached target in early July. The pattern construction that led to the move higher started in between mid-March to early May, with the dark blue highlighted bullish shift pitchfork. The market is right now moving down towards the lower time, currently at 216.70, having pushed down today below the important congestion between 223.70 to 224.60, which has the recent 50% Fibonacci line of the May to July move at 223.70. Perhaps most importantly, we have seen a move down through the bright red uptrend, currently at 224.65, and towards the rising purple highlighted medium moving average, currently at 218.5, that is just above the dark blue lower time. Now I would like you to keep hold of these thoughts in your mind, play them back if you like, and to now consider the pink highlighted April to date broken downtrend, currently at 231 even. This only really became relevant during the month of June when it effectively capped the market. I originally thought that this downtrend along with the lower time might make a large sideways triangle, but in the end it only managed to create a small sideways triangle with the previously mentioned bright red mid-June to date uptrend. The break higher in mid-July swiftly achieved both the primary and secondary targets topside, halting at the October 2011 high at 255.05. Prices have since headed lower through congestion between 241.05 to 243.40 and into a series of stratified congestions at 229.15 to 230.10, between 223.70 to 226.45 and at 220.90. Now this last one is being tested today. Moving back now to the bright red uptrend. Since the end of May and early June, this uptrend has also become part of another pattern, along with a bright new red trendline topside, currently at 267.10, that I drew last week. Together they make a bright red highlighted expanding wedge pattern, currently 224.65 to 267.10. Right now the market is attempting a breakout on the downside from this pattern. Now, the purple highlighted medium moving average below and even possibly the dark blue lower time are the immediate obstacles on the way lower, though I have some doubts about how they may handle the amount of ammunition on top accumulated since mid-May. However, if they get beaten, then we really don't have much. Perhaps some congestion at 210.45 until the October 2023 to date uptrend, currently at 206.55, and I'm not sure how strong this would be, as it's only a 2-pointer. London coffee. Prices made a peak in late April and a low in early May that set up the opportunity for me to draw 7 weeks ago bullish Andrews pitchfork for the late February to early May action. This week, because of market actions, I finessed this into a shallower bullish shift pitchfork for the same move highlighted in dark blue on my daily chart. We did see the top side upper time, currently at 47.44, tested in mid-July, but it held. And the market is right now between the overhead middle time, currently at 41.83, and the lower time below, currently at 36.22. In the process of moving lower today, prices are now testing down at the very recent early May to mid-July 50% Fibonacci line at 39.71, and the nearby rising purple highlighted medium moving average currently 39.54. These two highlighted supports are crucial, as below these, well, we really don't have much until the dark blue lower time. There's one other feature I'd like to draw your attention to once again. Last week we were set up for a possible monthly key reversal here. However, in the end, the market chose to make the lesser outside month pattern instead of a monthly key reversal. So, if we see prices establish themselves under the recent 50% Fibonacci line and the purple highlighted medium moving average, then there are opportunities on the downside. But first, the market has to do the establishing underneath.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.